Have you ever wondered what would happen if, with a single bang of the gavel, the Supreme Court just erased all tariffs? It sounds like something out of a political drama, but it's a question with huge real-world consequences for everyone, from big corporations to you and me. Let's dive into what a world without tariffs might actually look like. First, let's get on the same page about what tariffs are. Simply put, they're taxes on imported goods. A country puts a tariff on, say, cars from another country to make them more expensive. The goal is usually to protect its own car makers from foreign competition. This has been a tool in the economic toolbox for centuries, used by virtually every country at some point. It's a way to control trade, protect domestic industries, and sometimes to raise money for the government. The power to set these tariffs in the United States has traditionally rested with Congress. The Constitution gives Congress the power to lay and collect taxes, duties, imposts, and excises, and to regulate commerce with foreign nations. But over the last century, Congress has passed laws that delegate a lot of this authority to the president. Think of laws like the Trade Expansion Act of 1962 or the Trade Act of 1974. These laws allow the president to impose tariffs under certain conditions, like for national security reasons or to retaliate against unfair trade practices. This shift of power from Congress to the president is at the very heart of the legal debate. Some legal scholars and businesses argue that this delegation has gone too far. They believe Congress has given away a core constitutional power, creating what some call an imperial presidency when it comes to trade. The argument is that the laws giving the president this power are too broad and lack clear guiding principles. So what if a case challenging this presidential authority reached the Supreme Court, and the court agreed? What if they ruled that these laws are unconstitutional, and that the power to set tariffs must return to Congress? This wouldn't just be a small legal tweak. It would be an earthquake for US trade policy. Let's talk about the immediate aftermath. The first thing that would happen is chaos. Well, maybe massive uncertainty is a better word. All tariffs imposed by presidents under these laws would suddenly be on legally shaky ground. This includes some very high-profile tariffs from recent years, like those on steel, aluminum, and a wide range of goods from China. Companies that have built their entire supply chains and business models around these tariffs would be thrown into a state of panic. Imagine you're a US steel manufacturer who has benefited from tariffs that made foreign steel more expensive. Suddenly, your protection is gone. Your foreign competitors can now sell their steel in the US at a much lower price. You'd have to scramble to compete, potentially leading to lower profits, layoffs, and maybe even factory closures. On the other side, think about a company that imports parts from China to build its products. For years, they've been paying heavy tariffs, which increase their costs and force them to raise prices for consumers. If those tariffs vanish overnight, their costs plummet. This could be a massive win for them. They might lower their prices, become more competitive, and even expand their business. So, the immediate impact would be a giant economic reshuffling. There would be clear winners and losers. Industries that were protected by tariffs, like steel, aluminum, and maybe some manufacturing sectors, would face intense new competition. Industries that rely on imported goods, from electronics and automotive to retail, would likely see their costs go down. Now let's zoom out and look at the bigger picture for the US economy. One of the most immediate effects for consumers could be lower prices. Tariffs are often passed directly on to consumers. If you remove the tariff on, say, imported furniture, that furniture should get cheaper at the store. This would be like a tax cut for many families, increasing their purchasing power. More money in people's pockets could lead to more spending, which is generally good for the economy. But it's not all sunshine and rainbows. The industries that were protected by tariffs would be hit hard. The sudden influx of cheaper foreign goods could lead to significant job losses in those sectors. A town built around a steel mill might face an economic crisis if that mill can no longer compete. So, while some people benefit from cheaper goods, others could lose their livelihoods. This creates a really tough political and social problem. How do you support the workers and communities that are hurt by this sudden policy shift? Then there's the international angle. A Supreme Court decision to strike down presidential tariff authority would send a massive signal to the rest of the world. The US would suddenly appear much more open to trade. This could lead to better relationships with trading partners who felt targeted by US tariffs. It might de-escalate trade wars and encourage more international cooperation. Other countries might even lower their own tariffs on US goods in response, opening up new markets for American exports. However, it also takes away a powerful tool from the president's foreign policy toolkit. Tariffs are often used as leverage in negotiations. Whether you're trying to get a country to change its environmental policies, its labor standards, or its intellectual property laws, the threat of tariffs can be a way to bring them to the negotiating table. Without that tool, a president might have to rely on other, potentially less effective, means of diplomacy or pressure. The political fallout within the US would be immense. The power to control trade would shift dramatically back to Congress. This might sound good in theory, returning to the original intent of the Constitution, but in practice, it could lead to gridlock. Imagine trying to get 535 members of Congress, with all their different interests and political pressures, to agree on a coherent trade policy. It would be a messy, drawn-out process, influenced heavily by lobbyists from every industry imaginable. Instead of a single national trade strategy, you might get a patchwork of protections and deals that benefit specific congressional districts. A senator from a steel-producing state would fight for steel tariffs, while a representative from a tech hub would fight against them. This could make US trade policy less predictable and potentially less effective on the world stage. Over the long term, the US economy would have to adapt to this new reality. Capital and labor would shift away from the less competitive, formally protected industries and toward more efficient, globally competitive ones. This is what economists call creative destruction. It can lead to a more productive and dynamic economy in the long run, but the transition can be painful for many people. So, if the Supreme Court were to overturn presidential tariff authority, it would set off a chain reaction with profound consequences. In the short term, you'd see a wave of economic uncertainty, with some businesses celebrating and others facing a crisis. Consumers would likely see lower prices on many imported goods. In the long term, it would fundamentally reshape America's role in the global economy and rebalance power between the president and Congress. It would force a national conversation about what we want our trade policy to be: more protectionist to shield domestic industries, or more open to embrace the benefits of global trade. There's no easy answer, and the outcome would depend on how policymakers, businesses, and the public respond. It is a fascinating scenario that highlights the delicate balance of power in our government and the complex, interconnected nature of the modern global economy. What do you think would be the biggest change? Let me know in the comments below. Thanks for watching, and don't forget to like and subscribe for more deep dives into the issues that shape our world.